Good morning, Predicted Trades family. Hope everybody's doing great today. It is Wednesday, September 21st. It is FOMC day. So we know what we can expect on a day like today. Well, let's take a quick look at yesterday, or at least this week, right? We arrived down at our key levels here, 38.55. 3843.25, making a zone. We didn't completely test the bottom of that Monday, and we pushed off that 3855 up to 3900, back to settle at our 3878, then off to 3922. We could not hold that overnight and started a pretty stiff reversal that led us into open yesterday. Whenever we have such a strong push down pre-market, even though, it's lower volume, we want to let things settle a little. I'm not going to jump into long straight at open after we've dropped, 60 points from where we were. Or, call it 40 points. Anything over a 20, 30 point drop, I'm going to be very hesitant and wait for it to prove itself. You can see we dumped down, the next 30-minute candle set new lows, next one set some even further lows that got us close to that 38.55, but we bounced at about 38.60 and made a run up to 38.93. Now you can see I don't have anything marked at 38.93, so why did we reject there? Well, we want to look left. Pre-market, it was our last rejection. Right? When we talk about pre-market highs, we have the first rejection, second, and then third way up at pre-market high. We couldn't get past the first. Also, if we look left from 93, it's kind of where we topped out midday on Monday. So I know but some of us were long, and when you start breaking above 90, we're getting giddy that we're going to arrive at the next target, that 3900, and this rejection at 3905. But the second we start to lose 3890, we have, and this, candle goes red on a 30-minute, we need to start thinking back down, rejection of these highs, and then back down to our zone. I'm going to toot my own horn here because I've been talking about 3843.25 for a while. Right under 38.55, creating a zone of support. And if you look at the low of day yesterday, to the cent, the same. When I saw that, was a great sign to go back long. And yeah, I think we hit one little long in the morning, a short, and then some longs in the afternoon. And I know some folks did hit some shorts in these wicks, but overall I talk about every day. There's about 3 good moves in the market. We had a little up, then down, then back up. On Monday, we had a nice up, down, back up, right? So we're always looking for what those 3 legs are going to look like. Real quick, I'm going to throw on the Beast tool just to look at where we're at so far pre-market, because I know we're starting to set new pre-market highs, but we're not quite to outer shaded. We were topping out at our burger top. I'll give that a second. Always takes a second. There we go. Whoa. So overnight, sorry, let me get this to a normal time frame. This is way too zoomed in. There we go. That's not the right time frame. Come on, chart. There we go. So overnight, we struggled with our open level. We sold back to that 38.55 and caught a huge bounce right back up, setting a higher low, giving us nice trend lines to work off of. And right now we're just pushing to our burger top instead of opening near our outer shaded region. So we still have room to the upside. Our outer shaded region today overlaps with the daily 8 moving average at around 39.29, which used to be POC at one point in the month. A previous POC up here, now overlapping the daily 8 right at the top of these 4-hour squeezes at the top of our shaded region. That 4-hour squeeze spans from that daily 8 up to our key level at 39.41, which we haven't got to yet this week. So, simple premise. If we can hold this trend line from yesterday and overnight, which basically kind of overlaps our burger bottom and kind of the 4-hour squeeze bottom. We also have a couple other squeezes. Let me get this up. Looks like we have a 1-hour and a 30-minute squeeze that are going to be stacked up here. So we will be opening near the tops of squeezes. Would not be surprised to see a little pullback to the open level, maybe even to burger bottom, to test these trend lines. And we have our squeeze bottom right there at that burger bottom as well. Excuse me. We have our 30-minute squeeze there. Just above that, we have our 1-hour at 3,900. So just to say, when we have stacked squeezes, it can be kind of a slow grind to get through them. We do have FOMC today that's going to drop data around 2 p.m. and Powell speaking at 2:30. We've seen plenty of FOMC days where we do have a slow grind up to something key and then go sideways for an hour or so prior to FOMC. So I'm going to be ready to play long, also short back down, get in a couple of trades before the mayhem at 2 o'clock. And as we know, that can lead to some big moves, depending on what they announce. I think what's priced in and expected is a 75-point hike. If they do a full point hike, or 100 base points, then that could be a little bit of a shock to the market. We could see selling off of that just to price it in. But really that selling could only last for a day or so, and we could go up for the next week or two once they get it priced in. So, going to be ready for any scenario. Not trying to be overly bullish. They could, if what's announced is higher than expected, they could start some selling that just keeps rolling and rolling further down. One thing to note, and I'm going to take off the beast tool, but as you can see, we are in that opening range. Sell zone, buy zone, so going to play that range till it breaks. We have that 30-minute squeeze. So we've got a really good roadmap for today. Before I switch to the time frame that I want to show, I'll take off the beast tool. So we're back to looking at price. And one thing to note, so we had trend lines from low of year. We did get through those last week and into this week, but as you can see, we're not really diving lower. We do have that zone of support, and I'll zoom in a little bit. Just wanted you to see the trend lines from low of year on the daily. We have our zone of support. We have the trend lines from the lows of year. We almost got back to those pre-market yesterday, and came down to retest that zone. We're pushing off that zone. If we keep holding this zone, we can get right back above the trend lines from low of year and start pushing back up to our daily moving averages above. That daily 50 sits up at 40.50, daily 21 right at about our 39.96, 39.90. Yada yada, right? We can get to that daily 8, daily 15 this week, maybe even to the 21 if we have good news and good push, good volume coming in. Another thing to note, if we do start to head back down, we do have a trend line from the weekly. Let's go look at the weekly real quick. I normally don't cover all these higher time frames because I kind of leave it to everybody to do their due diligence. But a couple of things I wanted to point out. If we connect our dips in 2020 September and October, if you guys remember, right after the Tesla and Apple split, we had our first couple of dips on that COVID V-shaped recovery before taking higher. Actually, if you connect those two lows from September and October, that's where our low of year bounced. Not surprising, right? So our low of year for this year bounced right at that level. You can see we're starting to slip below our current lows of year that have sent us up. So I point this all out just to say if we do see more selling, we could get down to retest that weekly and still establish a higher low on the year, kind of creating a bit of a W. So just something to note if we do keep selling down. If we can get back up, move back above 4,000. Now just getting back to recent highs, we'll be testing that trend line from high of year. So we are settling into the wedge between trend line from high of year on the daily and weekly, and our trend lines from the weekly where we bounced, setting our low of year. So let's see, we could just end up in this wedge for the rest of the year. Would not be surprising, right? While we let inflation figure itself out, while we let these conflicts around the world figure themselves out, big money just could just keep us in this wedge, getting ready for enough signs to break through and head high again, or break down. But just wanted to point out some of those key things to keep an eye on the macro time frames, since we're usually down in the nitty gritty on the daily, in the lower time frames, the intradays. So where can we go today? Sorry for that long spiel. Let's see if on a dip we can hold 38.78. It was support on Monday. It was a little bit of resistance yesterday. Let's see if we can hold that. Try to push back to 3,900. Top of these 30-minute, 1-hour squeezes where we could consolidate and wait for FOMC. That could send us through to 39.22, back to highs of week, testing the daily 8 around 39.29, that old POC, and the top of this 4-hour squeeze at 39.40. We start to lose 38.78. Going to come back and test trend line from lows of yesterday and overnight. First trend line going to be kind of around 38.70 at open. The second one going to be around 38.60. And we have our key level 38.55 where that 2-hour squeeze sits. So just some targets if we start to give out 38.78, 70, 60, 55. If that can't hold, it's a revisit of yesterday's lows in the bottom of this 4-hour squeeze. And should news not be favorable from FOMC, kind of that first key target after giving out 38.43 is that 38.07. Understanding that we do have a daily Keltner here at 38.30. So targets the upside, targets to the downside. And yeah, I see some folks chatting in our Discord, just to let you guys know. Hopefully everyone in our Discord is watching prep, but I did drop a free beast tool for today. We are going to be in the main chat today. We're bringing a free day to you early since it's an FOMC week. I think we did this last time it was an FOMC, just so that everybody can, you know, kind of navigate together and hit some of that afternoon opportunity. So, look forward to that today. On NQ, we've got our squeezes setting in nice and tight. This 30-minute, pretty darn tight from about 850 to 950. So 100-point wide 30-minute squeeze. And you can kind of see a wedge on the week coming into FOMC, not surprising. In fact, probably worth marking. Don't start slowing down on me. There you go. So pretty tight wedge on NQ for the week. Like I said, 850, 950. If we can get over 950, we're starting to break out to the upside. If we reject, probably coming back to that 900 and 850 for a retest. If we can get going to the upside, first stop that psychological 12,000 where we rejected yesterday. Top of that squeeze, 1 hour. And then it's up to 12,050, 12,100, the big key level at the top of this 4-hour squeeze where the daily 8 sits, and back to this week's highs. If we roll over, start to lose 900, 850, then it's back to retest 11,800 and 750, just below last week's lows, and where that daily Keltner and 4-hour squeeze sit. Ready. Sorry. On the ready. Just got back above 1800, which was resistance yesterday and most of overnight. Sent us back down to retest that 1790. Now back above 1800. So let's see if at open we can stay above 1800, where we had all those overnight highs top out. If we can continue up, looking to get through this trend line, which actually goes back a couple of weeks. Let's just take a quick look. Oh, I didn't mean to go to daily. I meant to go to a 1 hour. Trend lines from highs of the last couple of weeks in the sell-off we've been having sits just above at around 1815. So let's see if we can truck through that trend line, start to head up to 1820, 1825, where the daily 8 sits. Past that, 1833, where the daily 15 sits, and the daily 21 up at 1850. If we start to give out trend line from lows yesterday and overnight, start to give out 1800, we're going to that trend line at around 1790. And if we give that out back to 1780s this week's and a couple of weeks ago's lows, and then 1760, the second Keltner to the downside and the bottom of a daily squeeze that's starting to form. No, I'm sorry. Oh yeah, It is a daily squeeze on the ready. Funny it's not showing up over there. It must just started. Anyway, moving on to YM and back to our regular time frame. YM having a decent gap up with everything else. Usually it's been lagging lately, so nice to see it strong. We could see some YM rotation early. As we've seen plenty of times. Yeah, YM and the Ruddy leading right now. So when YM and Ruddy are leading pre-market, usually means in the first hour or so we can see more YM rotation. NQ could lag a little bit, but then that usually flips over to NQ rotation. That's a little heavier after that. But right now, at around 30,900, big key psych level, 31,000, was a rejection point Friday, Monday, got through it a little. Couldn't revisit it yesterday, but we are up near where we did reject yesterday, around that 875, 900, right? So let's see if on a pullback we can hold and just call it 850. If we can bounce there and start pushing higher, first stop is that getting to that 31,000. And then past that 31,100 and 200 where the daily 8 sits and that daily Keltner at the top of this 4-hour squeeze. Anything past that, next big key level I'm looking for is 31,462. Call it 450 if you want. Where the daily 15 is now creating a little zone of target. We do still have POC up above too. Let's take a look at that. At 31,227. So we have POC up in the top of this 4-hour squeeze as well on YM. If we start to lose at 850, 800, then we're coming down to retest 700, pre-market low. Below that, back to yesterday's low, and that second daily Keltner down at the bottom of this 4-hour squeeze. Also that psych level 30,500. Apple. Try and burn through these names with a little more quickness. Apple very strong this week. I talked about last Friday that this zone was a pretty big zone of support for Apple and could be a spot where they take it long into this week. That's proven to be true. Didn't even need to retest it during the cash session, and we took off right back up to our key zone above Monday. Yesterday slipped a little bit below that, but then shot right through it at open. Basically, getting right back to continuation. When we see a quick pop up like that, right back to yesterday's highs, and we hold VWAP on our pullbacks, definitely should be getting that continuation play rather than looking for reversal. Apple continued up through the daily 815 and made it to the daily 21, where it reversed back down to that daily 8 and 15. It's why we track these moving averages. Whenever we get to them, we're going to react with them and start to paint a picture. We made it back to bearish stacked moving averages. The 21 is above the 15 and the 8. So in any interaction, we should be expecting hitting the targets, and when we pull back we want to hold those targets. So looking very nice above those. Those will be coming in as support today on Apple, that daily 15, daily 8. And they'll probably be right on top of each other, right around 156, 155 and a half. So let's see if we can hold those moving averages at the bottom of this 30-minute squeeze. Looking to bounce up to the top of this squeeze, back to yesterday's highs, to the daily 21, and the push further to our 159.5, 160, where the daily 50 sits, and 161 is the daily 200. And now I'm reminded to switch this back so we can also keep a track of our 100s on some other names, because Apple's the only one that's pushed this hard and is back up within range of getting to its daily 200. Always something we want to keep an eye out as, we close around 57, let's call it. This has 4.5 point range. We can get up to 61, and that's where that daily 200 sat. So now we are within range on a normal push. But if we start to roll back over, losing 156, we're going to probably come quick to 155. If we can't hold that, then it's back to test the bottom of this zone near 154. And if that gives out the daily 100 at 152. AMD. AMD, still not doing anything. I've been saying it for 2 weeks now. They need a break. They're not rotating into chips whenever the market tries to head higher. Chips have just been heading lower and slightly basing. Did try to retest last Friday's low, but it held yesterday. So that could be maybe the only thing going for chips right now, is that they're kind of wedging. They held the retest of lows and could start to wake up a little bit here. But we've been stuck in a range. We're at the bottom of that range. Pretty simple. If we can hold, it's a fight back up to that 77, top of that range. Then an attempt to break out to the next level, 78, where the daily 8 will be, back near, let's say, last week's high of the range. And any lower, 73. Amazon. Amazon, there we go. Amazon kind of went the way of the market yesterday. A little bit of up, and then a nice big down. Did not set a new low of week, and got back above that daily 100. So, simple premise today, looking to hold that daily 100 at around 121.5, bottom of that 30-minute squeeze. Push off of that, get back through 123. In a bid to get back to yesterday's highs, near that daily Keltner, 124.5. And then to that daily 8, 126, at the top of our 4-hour squeeze, 127. We know we have the moving averages a little further above that, stacked on our way to 130. We also have, is that a daily squeeze starting to pop up on Amazon that we have been at the bottom of all week? I like that. Very good confluence to an upside bounce. Moving from this bottom of this daily squeeze. Do we have the top? Ooh, the top is up near the second Keltner. Look at that. So, just to say, at the bottom of a daily squeeze on Amazon, we could make a move from this 121 up to this 137, 140, as it could start to open up over the next few days. You know, this journey could take a week or two. We can always, if the whole market is weak and start to roll over, lose that daily squeeze, with the next stop being 115, where the third Keltner sits. But if you guys remember from the if you guys remember from the drive up, most of our names got up to second Keltner. This is just the most recent one. But Amazon has been nice and strong. Got up to that second Keltner, down to this second Keltner, and based. And a daily squeeze started to form. So, definitely very interesting and could be a good spot for Amazon long over the next week or two. I like that setup. So keep an eye on that. I think I covered upside and downside targets there. So moving on to BA. BA holding a nice steady uptrend. Just for the fun of it, I'm going to take the exact trend line I had and duplicate it down to the extreme lows. Just something I like to do sometimes to create a channel of support. Overall on BA, looking for it to stay above 145, bottom of a 30-minute squeeze. Keep on trucking through this daily 100 at 147. On our way back to 149, where the daily 8 sits, and 150 at the top of this 4-hour squeeze. Past that, we've got the daily 21 back at 154. Cat. Oh, cat. A little weaker yesterday, not showing as much relative strength as something as like BA. Good point to point out, with BA kind of leading to the upside, if we do start to roll over in the market, the BA could be a good short to play catch up back. But I don't love shorting the things that are trying to lead right now. But just throwing out that downside play potential. With CAT looking a little weaker, not loving it to the upside. Let's see, are we starting to print back near yesterday's highs? Yeah, we kind of are. So let's see if CAT can hold 178. Looking to get up through 180 on the way to 182, where the daily 8 sits in the top of that 2-hour squeeze. If we lose 78, back to 76 and this week's lows for a test, and then 175 for that second Keltner to the downside. Google. Just been stuck in a 2-point range all week. Pretty simple. Let's see if we can hold 101, get through 103 on our way back to 104.5, where the daily 8 and that 4-hour squeeze top sit. We also have that daily Keltner at about 105 and our 21 up at 108. If we can't hold 101, we might get that full test of 100, maybe even 99.5, where that third Keltner to the downside sits. Hey, morning, Drewski. GS, a little weaker yesterday. But printing right back up near yesterday's open already, pre-market, and kind of above those midday highs. So GS was giving us some decent strength this week and some decent moves to the upside. Well, let's see if it can stay above 324, with the goal of getting back to about 328, 329, where the daily 8 sits, 330 at the top of the squeeze, daily 50 also right there, and daily 21 just a little past it at 332, still in the top of that squeeze. So we could like reach up and hit that 21 and still be within our 4-hour squeeze. We also have a daily squeeze here on GS that we've been at the bottom at, just like Amazon, and we have our our daily 100 just below. We haven't quite tested it, so if we do give out 324, 322 is the next stop, 320 this week's low, and then that 318 where that 100 sits for that downside target. So trap between the 100 and the 50 and 21. Let's see if we can fight up if the market heads up today. And if we head down, we know where we're going. JPM also a little weaker yesterday, got down to that 115 psych level in the bottom of that 4-hour squeeze, caught a nice bounce, back above the daily 50 pre-market at about 116. Let's see if we can hold 116, start to trek up through 117 to 118 where the daily 100 sits. That daily 8, daily 21 at 117. If we lose 116, coming back to retest 115 at the bottom of the squeeze. Daily squeeze much lower, actually sorry, it's at a 2-day, no, daily squeeze lower at about 112. Should we start giving out 115 and this 4-hour squeeze bottom? Meta. Yep, XLC and chips just not getting the love right now. They'll start to break out and it will be a good trade at some point, but they're not trying to lead to the upside. The market's just kind of dragging them. So I'm not loving this, but you know, we can get going to the upside. First stop at 148 on the way to 150 and about 151.5 where the daily 8 and that first Keltner will be today at the top of this 4-hour squeeze. If we give out to the downside, giving out 145, coming back to 144, this last week's lows for a test. And if 144 starts to give out, 140 is the third Keltner down. But, you know, remember our Keltners. As we were going up in that rally for the last month, we were getting up near second and third Keltners on a lot of names. And we've had our break back to and through the means, back below. Now we're at second Keltners, going into this meeting to sell. We've already sold stuff, right? For 2 weeks, the market has been selling after a nice rally. Just saying, we have to. That's why we track the Keltners. We're kind of getting to the point where we've sold enough already. It's about time to head back up. And if we get bad news and we do see some selling, you know, we usually don't live too long outside of third Keltners. We usually reverse and start to get our reversion to the mean. So, just saying, we are set up very nicely to take off. You know, as long as we don't see any curveballs today or any hawkish rhetoric, right? But yeah, I've covered Meta onto Microsoft. Again, not looking the best. Needs to get through 245, 246 at these very tight 30-minute, 1 hour, 2 hour squeezes. If we can get through there, it's up to 348 where that 4 hour squeeze top sits, and that daily 8 will be catching up to that today. 248, 250. Our daily 21 is way up at 258, so definitely going to take a couple of days to get there. Netflix. Oh man, Netflix, you know, we have a leader. This has been leading to the upside. Every day has given a nice push, except for Monday, because we open at the top of a bunch of squeezes and had to slide back, right? Found our support, and now we've been pushing against this daily squeeze top. We can continue to push against that top, get it to open to the upside, and keep traveling up to our second and third Keltners, right? Basically, let's see, if Netflix can stay above 240, 242, like it's been trying to do, as long as we stay above that on Netflix, can continue this climb to get to 250 and through it. But we also did hit 250 yesterday and rejected and didn't really bounce at all. So we are at the top of a number of squeezes, a big daily squeeze. 250 could be the resistance that starts to send us back below 240. So if we do start to give out 240 back to 235, bottom of this 2 hour squeeze, where the daily 21, or sorry, the daily 8 sits, past that 235, 231, 230, where the 15 and the 21 sit. And she's been having a good run in leading. So wouldn't be surprised if, you know, we get another good push and then she starts to take a break and come back to test these moving averages to start the journey higher again. While some other names that haven't been getting love get rotated into, like I said, on chips and XLC, at some point they'll start to break out to the upside if the market's going to continue up. When they start to break out, some of these names that have been leading might take a break. But Netflix, relative strength. NVIDIA. Looking a little bit better, right? To trying to break out to the upside. On yesterday's pullback, it held what was resistance last Wednesday, Thursday, Friday, right? So starting to look pretty good. As long as we can stay above 131, 131 and a half. I'm sorry, 130 and a half, 131 and a half. You could basically connect from that low that we bounced midday yesterday and kind of some of our lows from pre-market, wanting to see that be support. That's also where our 30-minute squeeze bottom sits, which is not surprising. So as long as we can hold that 30-minute squeeze bottom, we can continue to try to break out here. Already starting to do it, pre-market, setting new highs. First stop getting back to yesterday's highs around 134, this daily 8. 135, top of the squeeze, and then past that 138 where the daily 15 and first Keltner sit. That psych level of 140 where we did reject a couple of Thursdays ago. And ultimately with the goal to get back to that daily 21 up at 145, kind of our last highs that we sold off from on that CPI drop. So not a bad setup. If we do start to lose that 130, coming back to 128, 126, last Friday's low, and the bottom of that 4 hour squeeze. QQQ. Did not set a new low yesterday. New low of week, that is. So we're kind of setting up into a wedge. Let's see if we can stay above this 30-minute squeeze bottom at 288. The goal of getting back first to that 291 that we rejected yesterday. This trend line, which looks like it might be a little wonky, so don't mind that trend line. In fact, I'll just get rid of it and redraw it if needed later. But basically, let's see if we can get up to that 291, top of the squeeze, 30-minute squeeze first. If we can push through that, looking to get to this 293, top of this 4-hour squeeze. The daily 8 and first Keltner are at about, we're probably going to be at 293 today. And let's just see for fun, that daily 21 catching up to that psych level of 300. It's going to take a couple of days to get there, if we can break out of this 4-hour to the upside. If we start to reject any of these numbers and head back and can't hold that 288 squeeze bottom, likely coming back to 286, yesterday's lows, and 285 down at the bottom of this 4-hour squeeze. SPX. And I know lately I haven't been covering Roku, Shop, and Snow. I haven't been touching them, but I did look around at Snow, and actually yesterday it was perfect to our system. What was it? Snow was at 180 something. Yeah, so the 180 puts and the 190 calls provided amazing opportunity. I'll just show you. Because we only got a couple of names left, we're making good time. Come on, toss. There we go. Been talking about Snow since that earnings gap up. But all I wanted to show on Snow, we opened, looks like we hit our burger top. We also went down to the, yes, the prior day's open, right? So slipped our burger bottom, prior day's open, reversed, went up right to our purple hash line, and reversed right back down. The 190 calls. I can't remember the exact prices, but I think it was like a 2 to 5 or 6, and then another 2 to 5 or 6 right back down, and working very well off of our beast levels. Let's see, basically, if it can do the same thing today, go from about this 382 back up to, or the 182 back up to 190 and beyond. But I know I haven't been covering those lately. They have been making good moves. I just feel like nobody ever trades them when I covered them, so either way. Let me know in the chat, either here or in Discord. I can start to cover those names again. SPX. Dealing with a little gap up. So going to be opening back near some of these highs. Let's see if, we've done a pretty good job at making a base at 38.50, 38.40. We held it. Only dipped below it just a little bit to hit these squeeze bottoms right back above. So if we do have a little dip, looking for that 38.40, 38.50 to hold, kind of making an inverse head and shoulders. But as long as we can get through that 38.76, 38.80, which has kind of been the top of the range this week, then it's back to that high at 3900, and then beyond to the daily 8, 3920, daily Keltner sitting there as well, and our key zone back above. This would be, I think within reach today would be 55. Yep, we could get up to the daily 8 into this range today on a normal move. To the downside, if we start to give out that 38.50, 38.40, and this week's low, 3800, and that third Keltner to the downside at 37.70. Bye. Oh, SPY. I think this was an old gap level that we've obviously filled, but I've kind of left it in because it did end up being the range we've been stuck in for Friday and this week since we arrived here. I also went back and found another, I don't think it was a gap. Let me go double check. But I found another interesting zone of support. Yeah. So it was this wick from back in May. You know, we had a big gap here that we did end up filling. We still have, you know, that gap up above, which also got filled. But anyway, I marked this a level just because I noticed that we caught some interesting bounces there, some interesting candle interactions, and once I marked those and connected it over, it was where we were at for support. So in a way, kind of a shoulder line, you could call it. But coming back down. That's basically what I've been keeping an eye on. I marked that previous low of week at 381.5. We wicked just a hair below that yesterday, but we were at the bottom of that 4 hour, no, come on. Yep, 4 hour squeeze. So we made it to the bottom of that 4 hour squeeze, tested this week's low, and caught a nice bounce. You can see we're pushing right back up to some of those highs from yesterday. So on a dip, looking for that 30-minute squeeze to hold this 382, 383, top of this zone to continue setting higher lows. Looking to, you know, we might not get that dip, but if we can keep pushing through this 30-minute squeeze top, looking to get up to 388.5 in the middle of this zone, key wick from prior, and up to 390 at the top of this 4 hour squeeze. We can reach even to hit that daily 8 and Keltner, which will be, you know, stepping down slightly today, probably at about 390, 391. It's kind of those targets to the upside. We closed around 84. Yeah, we can get up there. And then keeping in mind that our daily 21 has come inside of 400. Ooh, and our daily 100 sitting at 400 as well. So first target getting up to the daily 8 and first Keltner, and if we get continuation over the next day or two or week, up to the daily 21, daily 100. If we start to give out that 282, back to the lows, back to that 382, back to the lows of this week, and that 380 psych level in the bottom of this zone of support. Any further past that, we have the third Keltner to the downside, arriving near that 375 and 374 key levels of support. Tesla. Just like Netflix, been strong for days on end. Man, yeah, we've been hitting Tesla for a couple of weeks. I remember I remember a couple of weeks ago we hit the 280s off Beast that were a big win. We hit the 300s off Beast that were another big win. I think 2 weeks in a row. Yeah, and Tesla keeps trucking. I think we've called out the 310s and 315s this week that were some great trades. I think yesterday those 315s went about 250 to 6, something like that. So on Tesla, let's see if we can continue to hold where we bounced yesterday at that daily Keltner at about 305.5, 306. If we can continue higher, looking to get back through 310, 312, back to the high, and that next Keltner up at 316. If we keep trucking, that third Keltner is going to be up at 325, 326. If we start to lose that 305, 306, going back to the daily 8 at around 302, psych level 300, and the daily 21 back at 295. UVXY, going to check in on it. So I love what I'm seeing here in UVXY. We got up on Friday, hit a daily squeeze top. We've started a downtrend and kind of a channel. Connect these two highs, a couple of these lows, and see that we're shifting a little bit into a down channel. And I drew a zone that I have been talking about for a couple of weeks, that when we get here, we want to see rejections that will lead the market to a pop, and we've gotten that a couple of times. So, not surprised yesterday to see us base at this daily 8, daily 21, make a trip back up to this daily 50 and this zone for a test, and now we're coming back to those levels. So, if we are going to see a downside, a dip in the market, we're going to likely see UVXY hold these daily moving averages and this 10 psychological level, push off of those back up to that daily 50 to this zone, and probably through it back up to these highs around 11. But I like the progressively lower highs. So if we can see upside in the market today, looking for UVXY to give out these daily moving averages around 1010, 1020, get under that $10 down to this 9.8, the bottom of a 4-hour squeeze, maybe even start to head lower. Ultimately looking for it to get back down to $9 in the bottom of this daily squeeze, the last spot that we kind of bounced at. For VIX, last but not least, my ES just keeps moving almost back to that 3,900. Also, one thing I've been showing you guys is a moving average cloud tool that will sooner or later be coming out, but one thing that I've done is just turn on only the 45s across a number of time frames. You can see we are back above the 15 and the 30, and I think even the 1 hour. So we're starting to get above some higher time frame 45 moving averages, which can mark change of trend. So I love that those are lining up with that 38.78 on a dip. Definitely want to see that hold. But back to VIX. A little bit of an uptrend, but we are again setting lower highs. So let's see if we're going to see downside in the market. We're probably going to see VIX stay above 27, where it's trying to settle, and above 26.5, kind of the bottom of what is a little 30-minute squeeze here. We did kind of like yesterday. We fell to 26.5, but we didn't really dive below it. We kept popping right back above it, and then we took off from 26.5 up to 227, 27.5. So if we're going to see downside in the market, we're going to see something similar, where VIX stays above 26.5, gets going back through 27, comes up to 27.5, 28, and maybe pushes back to this high to 28.8. That's if we have some downside in the market. But if we can continue trying to get to the upside in the market, want to see VIX get back below 27, finally give out 26.5 and go straight to 26, where that daily 100 sits, daily 8, and then further down to 25.5, 25, where the daily 21 sits, in the bottom of that 4-hour squeeze. So we've ran into the 4-hour squeeze a couple of times and rejected hard. Let's see if we can get another hard rejection and start to get to the bottom of it. So that's it for today. We'll see everybody in chat. And if you made it this long, normally Thursdays are free days, but we started a little early this week since it's FOMC. So Wednesday is a free day. Come on in. You can test out our tools and trade along with us. We'll see everybody in chat today. Good luck.